Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Stephen Ehrlich, Director of Research of Digital Assets over at Forbes Crypto, to discuss the impact of Twitter accepting Elon Musk's takeover proposal. We're also going to take a look at levels in Bitcoin, as well as a number of other stories impacting the space. Stephen, it is great to see you as always. Welcome back to Trade Talks. And I'm really glad that our monthly segment aligns with the news this week that Twitter has accepted Elon Musk's takeover proposal, because it's not only important for journalists such as you and I and how we communicate our thoughts and distribute our shows, but there's also an implication for the digital asset space as well.
Yeah, no, thanks, Jill. And thank you for having me. Again, it's fun when our interviews align so well with the news cycle, especially when it pertains to crypto. And you're right. I mean, this is a really big deal. I liken Elon Musk's takeover of Twitter to almost like a $40 billion bet on digital assets, and essentially his belief in his own ability to kind of succeed where virtually everybody else has failed so far. I mean, there's been innumerable numbers of social networks, blockchain-based social networks that were supposed to sort of take out the Twitters and Facebooks and the likes, and none of them have really succeeded. They haven't really gotten the traction, and they've really struggled under sort of this like onslaught of regulatory scrutiny about like what are their roles, what role should they play in our lives. Like what about privacy? What about censorship? And Elon Musk is really, again, making essentially a $40 billion bet that he knows what to do. Aside from that, I mean, Twitter has been one of the companies that has really sort of taken a leadership position in trying to integrate digital assets, crypto, blockchain into its operations. I mean, recently they had a partnership with OpenSea, the world's largest NFT marketplace, so that the owners of certain NFTs can actually use those as profile pictures. Which is a big deal. They've integrated the Lightning Network, which is sort of an ultra-fast payment rail on top of Bitcoin, so that people can send tips through Bitcoin tips to some of their favorite contributors. And there's a lot of other stuff going on too. So aside from him trying to figure out what to do as far as Twitter's future, which has its stock, and everyone knows it's a very junky type of ecosystem, it's really curious to see what he's going to do with crypto, and then Dogecoin in particular, which surged on the Takeover news, which is kind of seen as his favorite kind of cryptocurrency. For what it's worth, though, I mean, crypto is seen as, Twitter is seen as sort of like the town square of crypto, and it's a little janky, but it has a very, very strong following among crypto users, in much the same way that crypto has. So Elon Musk has a very strong built-in audience if he can find a way to harness it.
Yeah, I would agree with you, Stephen. I think when we think about digital media law and policy and what it means for crypto, those are the two most exciting verticals of what's happening in the social media space right now. Let's talk about Bitcoin specifically. This has been ping-ponging across 40,000 to the up and down side. What does that suggest to you? What should investors be looking for?
Yeah, I mean, it suggests that people are starting to bear down. I mean, for lack of a better term. I mean, just as Jill and you and I have talked about numerous times over the last year and a half, 2 years, about how everything seemed to go right, even if the world was struggling from COVID and et cetera, for digital assets, crypto, and just the markets as a whole to go on the up and up. Now things aren't looking great. I mean, we're seeing increased rate increases. People are worried about growing COVID cases coming out of China and what it's going to mean for the supply chain. The conflict between Russia and Ukraine, even though it's starting to fall a little bit off of the front page, is no closer to a resolution than it was months ago. And on top of that, it looks like the Fed is going to increase the rate at which it raises the federal funds rate, which is going to slow down the economy. And crypto, Bitcoin, which kind of sells at it trades like a tech stock, even though people tend to think of it as a form of digital gold. It's struggling. We are seeing some lower volatility. We're seeing lower trading volumes. Sometimes that can turn into then a big breakout in one direction or another. But for the time being, people are getting skittish.
Yeah, and we're also seeing in the headlines around Bitcoin mining, and of course the crypto proxy stocks, right? Whether it's the exchanges or other indexes and ETFs that hold, whether it's futures or spot within the wrapper itself. There's just been volatility across the board here.
Yeah, that's a great point. And one of the rules of thumb that we've really seen is that some of these crypto proxy stocks, equities, securities, et cetera, they tend to overperform when Bitcoin is going up. They underperform when it's going down, and we are seeing it. I mean, I was just looking at the charts a few minutes ago, and I mean, the a lot of the major Bitcoin mining stocks are down 40 or 50% for the year. I mean, Coinbase just hit an all-time low this week, and by comparison, Bitcoin is only down 20%. So you kind of see that the trick with some of these stocks is that they don't necessarily tend to trade on their underlying fundamentals. It's more it's almost like a weather vane for people's sentiments themselves. I mean, Coinbase continues to be a profitable company, and I'm long term, I'm bullish on its outlook, but people see it as a proxy, so it trades down. Within the mining stocks, we're starting to see a little bit of a divergence too. Excuse me, between some of the bigger guys like Marathon and Riot, and some of the smaller ones that that kind of really over leverage themselves, trying to bring on additional miners and so on and so forth to ramp up hash rate capabilities to get in while the going was good, and Bitcoin kept going up and up and up. But now that it's coming down, those miners are being constrained financially, and they're going to struggle to meet some of their hash rate targets and really grow. Fortunately, I think we're going to see some of the mining hash rate go down, and some of the bigger players that have already laid out their expenditures for this year and next year, and have really started bringing in the machines and turning them online, I think they're going to go up. But your larger point is well taken, which is just that when it comes to crypto, it's such an emotional thing. People don't necessarily trade rationally. That when markets are down and people are worried, the crypto proxy stocks are typically one of the first places that they may try to sell.
Yeah, I mean, Stephen, you can make that argument for any asset class. I mean, look how many equities have been incredibly volatile because people fall in love either with the products or with the name itself, and they're not necessarily focusing on the fundamentals. So, I just think Bitcoin gets a little bit more attention on it because it is a younger asset class. So it's inherently more susceptible to the volatility. But I want to end on a longer term note as we think about digital assets with Fidelity now accepting Bitcoin in some IRA plans. I mean, think about that. Fidelity, IRA plans, Bitcoin, that certainly does suggest that there's long-term validity there.
Yeah, and I actually just posted a story on this too. So it is kind of big news. Although if you looked at Bitcoin's price today, which is down, you wouldn't know it as such. But there's some important considerations for your viewers to take into consideration, excuse me, when they're thinking about putting Bitcoin into any sort of retirement fund, be it Fidelity, Coinbase operates one, and there's plenty of others out there. I mean, for one, age and sort of your time horizon. I mean, Bitcoin is unbelievably volatile. I mean, most of us remember back in 2018 when it lost 70% of its value in a matter of months, and plenty of other assets did the same. Bitcoin's down probably 40, 50% now from where it was in November when it almost touched $70,000. Of course, and there's been plenty of other similar drops of that magnitude long before Bitcoin and crypto went into the mainstream consciousness. As any chart will show you, it has always recovered and then some, but it can take some time. So people that are interested in saving for retirement with Bitcoin, I would suggest doing it as early as you possibly can, so you have time to make the losses if there's gains. And of course, always talk to an investment advisor, somebody that actually is being paid to give you investment advice, because it is an individual decision as it pertains to the percentage of your allocation, your age, the amount that you can contribute, so on and so forth. But of course, it is a big sign of faith that essentially the world's largest retirement account manager is offering Bitcoin exposure. And Fidelity has actually been very, very active in the crypto space for a long time. I mean, some of the executives actually used to mine Bitcoin on their own desks back in 2014. They filed to launch a spot ETF in the United States. They've launched a number of diverse ETF products offering crypto exposed stocks. So Fidelity is one of those companies that has really tried to be at the forefront of pushing things forward when it comes to digital assets.
Yeah, Stephen, I would agree. It's interesting to see the migration from the equity desks over to the digital asset desk. So certainly interesting for sure. Great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Joe.